Hello there, this is Dr. Narayan coming to you once again from Neo Trader on our new edition of a program called Charts and Beyond. This is episode number 5, and I welcome all of you who are tuned into this particular episode. If you have not seen the earlier ones, kindly visit our channel on YouTube and you'll find the links to all the earlier ones where I discuss various aspects relating to the current markets as well as elements which will help you with your trading, with your analysis of the markets, and with you being enabled to understand the market better and trade it better. So that is the objective of this whole series that I've launched from the new year. And as mentioned before, this will be periodic, a few times in a week, and maybe more frequently if the market action warrants it, maybe less frequently if the market is idle. Now, currently, what is the market doing as of today? Today, the market is continuing its decline downward. And as maybe we can see on the chart, the market has been on a continuous fall for the past several days. This is a chart annotated now with your CPR indicator and your camera pivots and or depending upon what I want to see at that point of time. But what we can observe here is a series of downward slanted indicators telling us that the move of the market continues to remain downward. Today, the market has opened with a big wide gap, and there has so far not been any attempt to regain the distance which has been lost. And in the last week, the indices fell about 2.4%, which in itself is reasonably large. And but the more telling aspect of last week's market is that the small cap, mid cap space, they actually fell by about 6%. Now, 6% is quite damaging. When 6% happens in the index, then actually the stocks will fall by anywhere between 10 and 20%. And we have all seen our individual portfolios get really hammered, and that has been a big sore pain point for everyone. And as of now, it doesn't seem like the market is in any mood to move out of that particular phase. Now, if you look at today's movement so far, then you're finding that the market opened with a big downside gap and did not really go down very much beyond that. And then after going down, there was a brief rally, and subsequently the market has been moving sideways. Now, when you have a big downside move and the market starts moving sideways, what it generally denotes will be two things. One is there has been enough interest at the lower levels to buy so that the declines were curtailed and the markets moved up nicely. If that had been the case here, then the markets would have shown a much better slope to the upside, which has not been the case. There was a brief rally. That's mainly because the market was in a tremendously oversold position. Bank Nifty was much more oversold compared to the Nifty. The PCR, the put call ratio in Bank Nifty was somewhere about 0.57. And even now, there is not much of an improvement on that put call ratio number. So therefore, it is evident that there has not been much of short covering either. And forget about new buying. So there will always be somebody who's finding value at these levels. Now it depends on whether they were covering their shorts from earlier or they were buying afresh. The lack of upside momentum clearly suggests that there is no new fresh buying which has come into the market, and so possibly the small rally which you got so far has to be considered to be a short covering rally. Now, short covering rallies in a down sloping market are to be used for shorting afresh. So the mantra, like we've been discussing earlier, or you have been reading or hearing from elsewhere, is that we need to be sellers on a rally. And today we got a very small rally. Actually, when the rally went up to say 48,800 or thereabouts, right? The gap of the morning, which was left in the morning, was filled. So I'm using the Bank Nifty as a indicator of the bearishness in the market right now, because that is the index which is actually set of bearish signals. Okay, so this I'm showing you in the 5 minute, but if you take the daily chart, the daily chart also shows you that the trading portion is not very attractive, and hence uh, the bearishness actually continues. Now everybody is of this view that how long can this bearishness continue, and everybody is having difficulty. Like I tweeted a couple of days back, I said if you're having a problem with the way the market is behaving currently, then please understand that it is your unwillingness to admit that the market trend has turned down in the short term and that it continues to remain down as of today also. Acceptance is the first element that is required for us to repair whatever situation is in front of us. If you cannot accept the fact that the market's short term trend is definitely down and intermediate trend also would be turning down, because if you look at both Nifty and Bank Nifty, they have been declining from somewhere around the end of September. So now we are solidly 3 months plus into a decline, and that is good enough time frame for it to be called an intermediate decline. Now, intermediate decline is now bringing the the index down. And if you look at the Bank Nifty, there was a very strong support zone out here, somewhere close to 50,000. So 50,000 was decisively broken towards the later part of last week, and once it broke, it was a good support zone. So there was a lot of short puts in the expectation that the 50,000 area will be defended. But unfortunately for those holding that expectation, it was waylaid and the prices have actually fallen, and then considerable more pressure has come onto the Bank Nifty. Today, the Nifty is doing a little worse than the Bank Nifty because it has not become as oversold. If we talked about PCR earlier, PCR for the Nifty at the start of the day was somewhere close to 0.70 to 0.75, much better than the Bank Nifty at 0.57. So short covering has actually come into the Bank Nifty, but then if you check what has happened, that has also been sold into, right? And therefore there is no real salvaging of the trends. And as we speak now, the bank Nifty is hitting down further. So if that is the case, then the markets will continue to plow down a little lower, because immediately there is no support zone. And if we were to break this 48,000 level now, or something like 48,300, which we saw in the morning, I think we will have a further decline of about 1,000 points or more in the Bank Nifty, and that might trouble people a little more also. On the Nifty future, again oversold, but maybe having some more room for some further decline. So as things stand right now, it looks like we may hit somewhere around 22,800, 850 levels before some meaningful support is found. Now, question may be, why is the market falling like this? What has changed substantially that the market should continue to fall for the fourth month in succession? Well, the standard excuses are there that we were overbought and valuation were out of whack and all that. But I didn't see anybody minding that fact when the market was going up. We're all bulls at heart, and we love when the markets are bullish, because as our portfolios go up, our net worth goes up, and that creates in us a sense of good feeling, a goodwill within us, and we just want that situation to continue. And as the market falls, on the other hand, we have a diminishing of our net worth through our portfolio. Now, here is a tricky point which I have written about in my weekly column with NDTV Opinion Digital Media. There you can catch it, where I've said there was a marked divergence between the topping of the large cap and the topping of the mid and small cap. If you take the Nifty 150 momentum index, which the plot is almost identical to the mid and small cap indices, but the kind of stocks which are there in the momentum play are the ones which most people are holding. There was a divergence there because the mid cap, small cap index or the momentum index, they all went and topped on 17th, 18th of December. That is almost 2.5 months after the Nifty Bank Nifty had topped. So if you see it in from that perspective, the reaction which is going on in the small and mid cap area is hardly about a month old, right? And whereas now we are finding that the large cap area, the fall is already going into the fourth month in succession. So people are looking at the large cap area, they are looking at the index, and then they are deciding that, oh, this has come down quite a bit, and prices have also come down substantially, 20, 25, 30% in various mid and small cap stocks. So it might be a time for bottom fishing in the market. But then you got to understand that this particular space, the momentum investing area that most of us engage in or is talked about on television or WhatsApp channels or Telegram groups and all that, are mostly the momentum plays. Now that is down just 1 month, and that has not been enough for a substantial 3-4 year bull market which we have seen there. So you have to treat the markets a little differently. The large cap will be in a slightly different area compared to the small and mid cap. So there may be more pain in the small and mid cap area. That is what I'm trying to say here, and I'm trying to warn you about. So do not be in a rush to go out there and buy stocks which had made you money in the past. Right now, we are into the results season, like we discussed in the earlier episode, and I've given you some prompts about how to deal with them. And today, I think the only notable result that I find in the list is HCL Tech. Now, if I were to look at HCL Tech as a share, and then I look at the daily chart of HCL Tech. What is wrong? It did not come out okay. HCL. If I look at HCL Technology, then I'm finding that the prices are right near the top. And in fact, it made an all-time high just last week. So now this is a tricky situation for HCL Tech. Now what can happen here is that if the results are good, there has been, and then it should be a happy augury for the shareholders. But please note that as we went into the result, there is a build-up. This is a point I had mentioned of how to look at the charts before the result. There is a bullish build-up. So there are lots of people who believe that the results of HCL Tech will be good, and they have all into a long position which might be awaiting a liquidation post the results. The results are today, so we will know very soon what is the aftermath. Now you consider the other situation that the expectations are already priced in, and so therefore what will happen is, even if the results are good, the flow by way of profit taking can take down the prices, because after all it is trading near the all-time high. The market's tailwind is missing, right? The markets are not very good. Now in TCS, which we saw and discussed in episode 4, there has actually been an upside price action, right? Now why did that happen? Because TCS results came in when the price action was here, right? When the price action was here, the expectations were not built into TCS results. It is not that TCS results were anything fantastic. It was actually pretty ordinary. But what this reveals is that the market today is actually hungry for good news, provided that good news is already not factored in. So the market, it latched on to the better order positions that TCS deal struck by them. It latched on to that, and it chose to ignore the fact it chose to ignore the fact that the results, the numbers were not so very palatable. So that is what happens when I said what is discounted in the market. Ordinary numbers were already discounted in the market. And when order wins and deals being struck, which was not discounted in the prices, the market latched onto that. And from the very next day, the prices have moved up with a gap, and that upside action continues into today. The other result we had discussed was Tata Elxsi, right, on the same pack on the same day. Now Tata Elxsi, even though there was really no expectation built in, but the numbers were disappointing, right? And people have traditionally been bullish on Tata Elxsi. Chart wise, it was down to the previous low area, and therefore people would have probably expected in a mild way that this bottom will hold and send the prices back. That they were cautious enough not to build in bullish expectation, and when the numbers disappointed actually, so then the stock went down with a gap, and there is really no improvement in the prices. It was not a disaster of a result, but so it has not really caved in. Now what caved in and what went against our expectation, when I did that the analysis in, I think, episode number 1 on Avenue Supermart, that was DMart. Now DMart had this unexpected news flow on that day where they said our volumes are going to be much better, some 17% better. Yes, all those things happened, but then see, on this day, the big rise which we had, and I had opined that possibly after the long decline that we saw in DMart, the bottom or the bearishness is consumed, and this might actually set the prices on an upward path. At worst, I imagine that this gap may be partially filled, but it was very clear when the results came on Saturday that the trailer here was far better than the actual picture. So once the results came in, and it was not seen as being very palatable. Now, if you look at FI, this is a well-covered fact, stock by the FIs, and the FIs have a very divergent. I think Bernstein is the only house which has said these results are positive and it will take the stock price up, and they've actually raised their target. But the others have all downgraded the potential for the stock for the coming quarters and ahead. And they have been very disappointed with the results, and they have actually lowered the targets down to 4,100. Of course, the price was already below that. And then there are other recommendations for 3,800, etc. Now, the stock has fallen below all those expectations also. So evidently, there is some amount of selling on the back of the results. Today, of course, is a little bit of a green candle. So I think maybe some bit of bottom fishing has come in, and you have the gap of last week which has been covered. Now what is required if DMart has to go up is that it should start trading back up into this gap, which is today morning's gap. And then it has to come up and cover the distance beyond 3690, and then continue further until it reaches this last demand point, which was at 3840 around. So from here till about 3840, DMart is in a bit of a no man's land where it's not very clear as to whether the bulls are triumphing or the bears are going to get dominant. Now, with the results having been, let's say, marginal here and there, not too bad, not too good, I think you might want to watch this particular stock. This is an expectation of bullishness which did not really emerge in the way that I had hoped it would. But so far, it is not too bad either. Now, you have to understand that gaps generally happen in the direction of the trend. So that was the reason that after such a long decline, I thought this gap would actually lead to uptrends. Now what has happened is there is a gap to the downside. This gap is actually threatening to resume the long multi-month downside which it was facing. So that is why I said the first job it has to do is cover up this particular gap, right? So these are small nuances of price actions that one should bear in mind, and one should be very clear, which is why I said right in the first episode that your basics must be clear. Second episode, I think, where I said burnish your basics. So even these small things are far, far better than looking at oscillators or doing an Elliott wave study and all of that. Detailing is required when it is being demanded, not right now. Right now, we are looking at whether the basic trend up or down is getting established or getting challenged or failing in an attempt, because that will decide the multi-week, multi-month move, and that is where the real money is made. One day up and down moves do not really make you some wealth. They may make you a little bit of income. All right. So these were the results that we had discussed, and I gave you a brief idea about HCL Tech today, and I also gave you an idea about how the markets are actually headed, and there doesn't seem to be any immediate indication that the markets are making any attempt to revive out of this uh, down down move that we have been witnessing. Here is the Nifty again futures. The gap is still very much intact for today. No attempt has been made to trade back into it. In fact, the small attempt which was made has also been lost, and now the bottoms are being challenged, and there's still a couple of hours left for the market to get over today, and it's quite possible that we may see some more declines. Keep watching the Bank Nifty more than the Nifty, because the Bank Nifty is the weaker spot in the market right now. So if short covering has to come in the Bank Nifty, then by tomorrow, then the Nifty may also follow. But if no short covering comes in Bank Nifty and it continues to go lower, it will pressure the Nifty also down. So I will leave you with this as the analysis and some nuances of charting that I would love to pass on, and I hope people are catching those nuances. And until I see you again in the next episode of Charts and Beyond, this is Dr. Narayan wishing you goodbye. अगर वीडियो अच्छी लगी तो प्लीज़ लाइक कर दीजिए. टुडे आई completely forgot to speak in Hindi, which I normally mix it up with Hindi English, but आदत सी हो गई है टू डू ट्रेनिंग प्रोग्राम इन इंग्लिश. सो मुझे थोड़ा सा ध्यान रखना पड़ता है कि भाई हिंदी में बात क्या करे. सो आई अपोलोजाइज फॉर नॉट हैविंग स्पोकन इन हिंदी, बट जनरल कंसेप्ट्स वेयर सिंपल. तो मैं आग्रह करता हूँ कि आप सबको समझ में आई रहेगी. अगर कोई बात आपकी समझ में नहीं आई हो या जिस पे आपको अधिक एक्सप्लेनेशन की ज़रूरत है, तो प्लीज़ हमारे कमेंट बॉक्स पे डाल दीजिए. I would be happy to answer you in the comment box, right? Thank you once again for staying with me till the end of this video.